Hello everyone. In this video, we will be discussing about the objective of accountancy, that is, what this subject wants to teach us. See, the very first thing what we have to learn is to learn the preparation of financial statements, where will we prepare the financial statements? In the books of accounts. As soon as I write this, no student asks me, sir, what is books of accounts? We have discussed books of accounts in our series 2. I am just telling you here what are the books of accounts. As a books of accounts are journal, ledger. There we record the details, or you can say there we record the financial transactions. Understood? As I have written this, there is a doubt in the class, that is, sir, but why are we recording, or why do we prepare the financial statements? See, we prepare the financial statements to calculate the profit earned by the business entity and to know about the financial position of our business entity and to know about financial position. Easy enough. Now we have to learn the another important word here, that is financial statements. What is the financial statement? Be very careful. Financial statements are: number 1, profit or loss account, and number 2, the balance sheet. We will learn and discuss about these in our further videos. Okay, journal and ledger will be discussed in the series 2. Now, this is our concept number 2, the objective of accountancy, that how to prepare financial statements, why do we need to prepare, to calculate the profit and to know about the financial position. The question is, sir, how should we record it in the books of accounts? To understand this, we will have our concept number 3. Concept 3, methods to record financial transaction in books of accounts. What are the different methods? See, again we have in methods 2 classifications. What are the 2 classifications? Understand this. First is classical approach and another one is the modern approach. Classical approach talks about the golden rules and modern approach talks about the equity concept. In this video, we will be focusing on the classical approach. See, what is classical approach talks about? Let's understand. Classical approach classical approach. For understanding the golden rules, we have to understand one more thing, that is the classification of accounts. Classification of accounts. See, very interesting. Please focus. See, if I have to tell you that you have to define the entire things in the universe into two categories only. So, I can say that there is only two things, things which we can see and things which we cannot see. Simple enough. So, if I write here that the classification is things which we can see and there are things which we cannot see. When I am talking about things which we cannot see, I can also say that are abstract. You cannot see the abstract, obviously. Things which we can see again can be classified into two parts. What are the two parts? Understand this. Either it can be human beings or it can be non-living things. You can say living things and non-living things. Non-living things like machinery, building, land and so on. Now if I say human beings, non-living things, things which we cannot see are, you can say that are the expenses, incomes in the business. You cannot see that obviously. Now if I have to classify into accounts, I can write that human beings are classified as personal account. Personal account. Non-living things but which we can see are called as real account. And things which we cannot see are classified as nominal account. Now understand, this is the classification of accounts: personal account, real account and nominal account. Now we will learn about the golden rules. The very important, or you can say most important rules are the golden rules. This will be used and helpful throughout our journey in accountancy. Please focus, be very careful. We'll learn it from the story, so it will become very easy for us. See, suppose Ram and Sham, two people are there, okay? What happened? Ram sold a pen. Ram sold a pen to Sham. So I can say, who is giving the benefit? You will say, sir, Ram is the giver of benefit. So I will write here, Ram is the giver of benefit. If Ram is giving the benefit, then who is receiving the benefit? Sham. Benefit means pen only. Ram is giving the pen, Sham is receiving it. So I will write here, Sham is the receiver of benefit. Because Sham is receiving the benefit. Now understand this thing. It means there are two people involved, Ram and Sham. When I am saying two people are involved, Ram and Sham, it means these are the personal accounts. These are the personal accounts. And there is a non-living thing included, pen. Pen we can see. It means it will become our real account. Ram and Sham are personal account. Pen is our real account. Now understand this. The receiver of benefit is called as debris. Sir, suddenly you are telling it is debris. See, in old Latin, receiver of benefit was termed as debris. Sir, but why are we learning old Latin suddenly? Because now we are entering into the golden rules and how to write a particular entry or how to record the financial transaction. So we have supposed to understand this. When debris was introduced in Latin and when accountancy these rules were written, we know that receiver of benefit is called as debris, but then what happened? English copied, Britishers copied it, and then obviously India was ruled by Britishers, so we also used their accounts only. So debris after copying became debitum, and debitum became the new word called as debit, and debit is written as dr. Understood? Receiver of benefit was called as debris in old Latin. When we transformed it into English, it became debit. Same like giver of benefit was written as credere. Credere became in our English language credit, that is cr dot. Sir, but why are we learning this and what is the purpose? See, when I am saying Ram sold goods to Sham or Ram sold a pen to Sham, then there is a particular entry we have to write in the accountancy. It means the Sham's account and the Ram account is there, and there is a pen account. Okay, so what will Ram write in his books? Ram will write that I have sold pen to Sham. If I have sold pen to Sham, Sham is the receiver of benefit, so I will debit the Sham's account. Therefore, I can say that Sham account will be debited. Understood? What will Sham write? Think from the viewpoint of Sham. Sham is thinking, I have received the pen. It means who gave me the pen? Ram gave me the pen. So whoever is given me the pen, I will credit his account, because giver of benefit is creditor. So he will write Ram account credited. So from this, our golden rule number 1 is, whenever we are talking about personal account, we will debit the receiver and credit the giver. Very simple. After this, what is happening? See, what is the case with the real account? Okay, tell me, Sham is receiving the benefit, Sham is receiving the pen. So what will Sham write? Okay, I am happy, I am receiving the pen, and Sham, see, look at the column of Sham, he will be debited in the books of Ram. But because Sham is receiving the pen, he will debited. So the rule became, for real account, debit what comes in and credit what goes out. Understand this? Debit the receiver, credit the giver, then debit what comes in and credit what goes out. Simple enough. After that, point number 3 we have here is nominal account. Nominal accounts is the abstract. I will just tell you what are the nominal accounts. In the debit side, all the losses and expenses will be written, and in the credit side, all the incomes and gains will be written. This is our golden rule. On the basis of these 3 very simple rules, we will understand the entries, journal entries, the book of account, and all the other concepts of accountancy are dependent on the golden rules. If we know the golden rules properly and thoroughly, we can understand any topic of accountancy very easily. Now, that's it for this video. We have discussed about the classical approach. What have we discussed? We have discussed classification of accounts, personal, real and nominal, then the golden rules. Please revise it properly. In the next video, we will be discussing the second approach, that is our modern approach, that is equity concepts. Thank you so much.